As you go through your day, making purchases, paying bills, and planning for your future, there's a little number that's constantly at work behind the scenes, shaping your financial destiny. It's your credit score. Whether you're dreaming of buying a new car, renting a dream apartment, or even applying for a job, that three-digit number holds immense power impacting your financial life in significant ways. Your credit score can be the key that unlocks your financial opportunities or the barrier that keeps you from achieving your financial goals. In this eye-opening video, we'll delve into the captivating world of credit scores, exploring why they are crucial in today's society and revealing how they can either be a financial nightmare or a money-saving dream come true. I think you'll be very surprised at some of the examples we'll look at. But let's start with the typical auto loan made during the fourth quarter of 2022. For this, we'll be using the State of the Automotive Finance Market Report, which is a free detailed report published by Experian that you can download for free. Links will be provided in the description below. As we can see, someone with a credit score of 780 gets the best interest rate of 4.75% on new cars and 5.99% on used cars. These are, of course, the average of all auto loans made during that fourth quarter. What's shocking is how much the interest rate changes as we move down in credit scores. In the range of 501 to 600, the average loan charged an interest rate of 10.79% on new cars and a whopping 17.46% on used cars. Now you might be asking yourself, are there really many people taking out auto loans with these lower credit scores? And the scary answer is there's a lot of them. In fact, 43.9% of used car loans and 18.7% of new car loans were with credit scores below 660 during the entire year of 2022. Let's look at an actual example showing how much financial damage can be done with these types of interest rates. When financing a $40,000 auto loan over 72 months, which is now the average length of all auto loans, having a credit score in the 501 to 600 range rather than having a credit score above 780 costs us an additional $17,000 in interest. Couple that with the fact that the average auto depreciates around 40% just during the first 5 years, and you can begin to see how autos are one of the main reasons people continue to struggle, and especially if they have a low credit score. How can they justify such differences in interest rates? Whether it's fair or not, or whether we like it or not, credit scores are being used to judge our overall character and how we handle all of our financial affairs. When it comes to loans, lower credit scores tend to be an exceptionally good predictor of higher delinquency rates. Institutions charge more interest for the additional risk and potential headaches associated with those types of loans. As we can see from this data from FICO.com, if credit scores are 760 or above, less than 1% of those loans will end up in default. However, if someone has a score between 540 and 559, over 23% will end up delinquent. As we move down the FICO score range, the delinquency rates increase dramatically. Before you start asking yourself how many people are getting auto loans with a bad credit score, remember that 43.9% of used auto loans and 18.7% of new auto loans made during the entire year of 2022 were with credit scores below 660. There are a lot of people paying higher interest rates. Now, before we delve into the most shocking examples of credit scores impacting our financial future, let's take a look at car insurance rates and be prepared to be a little shocked. According to Bankrate.com, on average, individuals with a poor credit score pay 97% more for their car insurance compared to those with an excellent credit. A driver with excellent credit pays an average of $1,764 per year for full coverage, and drivers with poor credit pay an average of $3,479 per year for the same coverage, according to recent 2023 data. But why does this happen? Well, statistics show us that drivers with lower credit scores tend to file more insurance claims. Studies have found that how a person manages their financial affairs is a strong predictor of how often they file claims, and insurance companies charge higher rates to mitigate those risks. What's interesting is only 5 states currently forbid the use of credit scores in determining auto insurance rates, while the other 45 states allow it, which means it can really impact what we pay for coverage. But unfortunately, it doesn't stop there with insurance. Home insurance also is affected by our credit scores. Just take a look at this table from Bankrate.com showing the average annual premiums paid for a $250,000 home. Someone with a poor credit score pays a whopping 150% more for their home insurance compared with those with an excellent credit score. Now, for the example that might really shock you, home mortgages. At first glance, the difference in interest rates for various FICO scores may not seem as dramatic as with the auto loans. However, their impact on a 30-year mortgage is mind-boggling. Using the average rates charged for a 30-year fixed mortgage, as of May 19, 2023, we can see that the interest rates for those with the best credit scores average slightly over 6.5%. On the other hand, for credit scores falling in the range of 620 to 639, the rate was 8.13%. But now let's look at an actual example. Here we are financing $400,000 against a home on a 30-year fixed mortgage using the average interest rates as of May 19, 2023. Your first surprise might be when we financed $400,000 with the very best credit scores. We still end up paying over $500,000 just in interest by the time we get the home paid off. That's more in just interest than we even paid for the entire home. However, if we have a credit score between 680 and 699, we pay an additional $38,176 in interest. And if we have a credit score between 620 and 639, we pay an additional $155,636 extra dollars in interest compared to the person with a score above 760. I'm sure you could have thought of something better to do with those hard-earned dollars totaling over $155,000 in extra interest. But the impact of credit scores goes beyond just loans and insurance. It affects various aspects of our lives we may not even realize. For instance, utility providers quite often look at the credit report and payment history when setting up an account, and a poor payment history may result in larger security deposits. And larger property management companies may run the report during the application process to assess the likelihood of timely rent payments, potentially leading to higher upfront payments and even denial of rental opportunities. In some cases, potential employers may also run the report as part of the hiring process, particularly for jobs involving security clearance or access to sensitive information. And a poor credit score can be a red flag that may impact job prospects. In fact, in a recent report from the National Association of Professional Background Screeners, 31% of employers are now checking the credit report on some employees, and 16% check it for all employees. And if we ever want to start a business or hope to qualify for the best credit cards with the most lucrative rewards, it can be very challenging with a low credit score. So we need to remember that a good credit score is not just a number, but a key that unlocks the doors to a brighter financial future. It can save you thousands of dollars in reduced interest on loans and insurance premiums over time. It can help you achieve your dreams of owning a home or driving the car you've always wanted, or even provide you with negotiating power and access to better credit card offers. We may not like it, but a good credit score simply reflects financial responsibility and discipline in so many areas of our life. It certainly plays a key role in our financial success. So start building it today and reap the rewards for years to come. If you want to know how credit scores are calculated and how you can build a great one, check out my video about building a great credit score. If this video has been helpful, please hit the like button and go ahead and subscribe to the channel for more videos on personal finance and investing ideas. Thank you for watching.